My seniors love that because they want to make sure their kids never have to come to the closing table with money to sell mom and dad's home. So to me, the FHA mortgage insurance, having that in place is the best thing for the senior to know that everything will be okay if they're not there. The great news about the reverse mortgage program, as of last fall, it was approved by Congress, and as of February, you can, up until now, you've only been able to refinance using reverse mortgage. You can now buy a home with reverse mortgage funds, okay? Again, no payment, again, no credit, again, same program. It's just that I have some seniors who are selling that big 4-bedroom home and downsizing to a very nice brand new place that has a homeowners association, so they don't have to shovel, they don't have to mow, they don't have to paint, and I am bringing X amount of dollars to the closing table. They're bringing X amount of dollars to the closing table. We're closing, they're in their brand new place, they have no house payment, they just have to keep their taxes paid, property taxes paid, and their homeowners insurance paid. So this is brand new, just kind of getting the word out to the community, but I have several clients who are doing a reverse mortgage for purchase. So this is very exciting for us because it's just a whole new avenue that seniors can look at being in the kind of home they want, a newer all-on-one-floor home. You can use the reverse mortgage proceeds for any way you choose. Sometimes people take cash at close to pay off a debt. Sometimes they take monthly income for supplemental income. Sometimes they want that line of credit just for what if, like my 95-year-old. She just has that line of credit for what if. Her monthly income is fine, but for those big ticket items, it's just tough on her monthly budget, so that line of credit is good. There are no restrictions on how you use the money. The only thing that you have to have is that the reverse mortgage must be the only mortgage on your home. So if you have an existing mortgage, we have to be able to pay that off with a reverse mortgage, which is kind of like getting a pay raise. So instead of writing a check for $500, $600, $700, $800 a month, that money stayed in your pocket because reverse, there's no monthly payment. So you go from a monthly payment loan that's required to a no monthly payment loan. Also, there's no prepayment penalty. You can pay off as little or as much of the reverse at any time with no penalty. Age and eligibility requirements. You must be 62. We've talked about that. The home must be your primary residence, but that doesn't mean you can't have a second home. I have several clients who we've done a reverse on their primary home here in Indiana, but they have a house in Florida, Arizona, up on the lake in Monticello, and they spend a lot of time. I have a lot of my clients who spend their winters in Florida or Arizona, but they always come back to this primary. So the reverse has to be done on what is considered the primary home, but that doesn't mean you can't travel or have a home somewhere else. The house must be free and clear or have a mortgage small enough that we can pay it off, because the only liens on the home can be the reverse mortgage. The last thing, which I think is excellent, is that all reverse mortgage applicants must attend reverse mortgage counseling with an HUD-approved reverse counseling agency. So it's about 30 minutes. We're very fortunate. We have a counselor here in Lafayette. There's a lot of communities that do not have counselors, so most of my clients have to do phone counseling, which is fine. But it's nice that we have someone here that you can do face-to-face counseling. But that is mandated by HUD. You must go through counseling. It's not a test. It's just an informational session. How much can you get with a reverse mortgage? Depends on your age, value of the home, and the interest rate. We use a HUD calculator. We put in your date of birth, and we calculate with the younger of the two. So which one of you is younger? You're younger. So we would use your date of birth, the home value, and interest rate, and it gets us what is called a maximum claim amount, We roll the closing cost in, so you have no out-of-pocket money, and then we have what is called a net principal limit. And that net principal limit are the proceeds. So you have that you can take lump sum, monthly income, whatever, but that's how it's calculated, how much is available. Now,